A very good morning to everyone here on the call this morning. Trust you all had a wonderful night, and so it's a beautiful Tuesday morning, and we are live here on Zoom and also YouTube to give you the morning market review where we make money daily. Um, Welcome once again. So today is going to be a beautiful day in the market. I hope you are ready to take advantage of the market movements to make money. Hence, let me also remind those that do not have their accounts funded yet to make sure the accounts are funded so that we can take advantage of the moves in the market. I don't know, perhaps you can come here to learn, but we are being more practical because at the end of the day, we should be able to know if we are buying or we are selling in the market. So my name is Victor, and I'm going to be taking you through this morning market review today. And please stay tuned. I just need more persons to come on the call. So far, I think we have like 26 persons. Let's have more persons on the call before we start in order to avoid back and forth. And also, do not forget that this is currently being live streamed on YouTube. So you can also head there after the video to make sure you get the video again from the beginning to the end in case there's something vital missed. All right. So in about 2 minutes, we are going to start fully in about 2 minutes. All right. Please just hang in there. In about 2 minutes, we are going to start the market review fully. Thank you.
Where is that pen I gave you?
Hmm?
Where that pen I gave you?
Lay down on the table. Oh, I kept it somewhere. I've got things.
You are worthy of my worship.
All right. Welcome once again to this review. So I think it's time we can kick off. Every other person joining us will meet us in the analysis. Meanwhile, please, if you notice your mic is on mute, kindly mute your mic. If you notice your mic is on mute, just kindly mute your mic in order to avoid rowdiness so we can have a very smooth session. Okay. All right. So what we are here to do is basically we are here to understand how we buy and sell, or basically what we do in the market is to buy and sell. Now, conventionally speaking, as a trader, I am into the business of buying and selling, buying and selling, buying and selling. So that is the circle with which I operate. And it is in buying and selling that I can make my profits, right? Now, conventionally speaking, you buy. If you buy at any price, how you make profit is price must go above that price you bought in future. So if I buy at 1,000, after buying, I need price to go above 1,000 so that when I sell it at possibly 1,100, my profit margin becomes 100, right? Then vice versa, you can also take advantage of the market also by selling. We call it CFD, commodity for difference. You don't own these things. You can trade on their price differences. That means even without owning anything, you can actually place a sell in the market and still profit from price movement. So if I envisage that price is going to crash, price is going to fall, you know, so something, the commodity is at, let's say, 1,000, and I sell, it means that after selling, price should go below 1,000. Let's say go to 800. That means my profit margin then becomes 200. Why? Let me explain again. If I buy at 1,000, I sell at 1,200. That's 200 profit, right? Then, as a trader, I need to restock, isn't it? I need to go back and buy again. I buy, I sell, I buy, I sell. Bought at 1,000, sell at 1,200. I need to go back to buy. So I want price to crash first before I can buy. I want to buy at a lower price. So that is the whole idea, right? So for you to buy, price should go up. For you to sell, price should go down. Now, bringing that ideology into the charts can prove somewhat slightly difficult than conventionally speaking, because price can just pull up massively and all of a sudden price can crash massively, okay? So there are so many variables to consider while trying to trade the global financial market, trade it online like this. Either you're trading Forex, that's currencies, you're trading commodities like gold, oil, even agro commodities, you're trading stocks or even indices, okay? US 100, US 2000, and the likes of them. They all follow almost the same pattern. So the basic thing to understand is what is moving this market, what is pushing price up, and what is pushing it down. It will be in your own best interest to identify those things that are moving the market. I think one way I can explain this is, that popular science law said an object perpetually remains at a state of rest except an external force acts on it, right? So that means price will always remain static except an external force acts on it. So for price to always keep moving, because we know that price is never static, price always moves. It shows that there's always external forces acting on price. So what are those external forces? Now, the major external forces we have, we categorize them as fundamentals. Now, fundamentals are those economic activities, social activities, even political activities, environmental activities, even natural disasters. Those things have a way of affecting the level of affecting price rather. Then we have a constant, which is demand and supply. Demand and supply is a constant in the market. The level of buying and selling, if there are more buyers in the market, price tends to go up. It forces demand, creates demand pressure, which forces price up. And if there are more sellers in the market than buyers, price tends to crash because everybody is willing to sell, but few persons are willing to buy. Hence, sellers start reducing the price in order to attract buyers to buy from them. So price crash, right? Now, demand and supply is constant. But these variables, these things that are not constant are more like fundamentals. Now, one of those ways we can capture the fundamentals is via Forex Factory. Good morning, Ayuba. It's Forex Factory. And okay, let me just use this. This is Forex Factory right here. Please, if you can see my screen, Forex Factory, you can see my screen. I'm currently on Forex Factory. If you can see my screen on Forex Factory, please type yes. You can see my screen on the chat. Just type it. Yes, only are you able to see my screen? Okay, all right. Thank you so much. Thank you. Thank you for your responses. So we are together. Now, Forex Factory. So I know a lot of you know Forex Factory, but you don't use Forex Factory often. And some persons still do not know how to use Forex Factory. Now, it's very simple. Now, this is one of those sites where you can actually find a lot of economic activities that are going to come out. And these economic activities have a way of affecting demand and supply. But my voice going on and off? Is my audio not clear enough? Acollinus ODGA. Is there anything wrong with my audio? I'm sure every other person can hear me loud and clear, right? Okay, so, okay, audio is good. All right, so let's continue. Let's continue. I'll just check your device, or you can log out and log in again. Okay, thank you. So, as I was saying, now this is Forex Factory, and you can see clearly from my left here that this is Tuesday, July 30th. And apart from that, we also have the various times allotted to every news, every economic activity that is going to be coming out. So, for instance, by let's say, okay, this is all day for Euro. Let's say by 9 a.m., this particular news for Euro is going to come out. Italian prelim GDP, that's a quarterly released data. So by 9 a.m., we are going to see that we have what we call the previous forecast and actual. Okay. So for instance, let me use one that have come out already. At exactly 12:01 a.m., we have that of GBP. That's the BRC shop price index. All right. Now we have an envelope here rather that tells us the level of impact if this thing is going to be affect the market or not. So the ones on the red envelope are high impact news, which we are going to pay our attention to. And the one on the brown envelope, they are medium impact news. Now, these are the two that we should focus on. The yellow envelope here just tells us low impact expected. So it's not something, you know, we most likely don't really pay attention to those kind of news that much. So we want to see the red. So hence, all day for Euro here is going to be happening all day. So at any time of the day, you can see price can be strengthened for Euro or price can be weakened for Euro. All right. Then at exactly whatever time allotted, say 9 a.m. here, we're going to have the previous at 0.3%, we have the forecast at 0.2%, then actual is going to be released. Now, let's see here if actual greater than forecast. Actual greater than forecast is good for currency. Actual greater than forecast is good for currency. What it means is that at exactly 9 a.m., we should see a data here greater than 0.2. Yeah, we should see a data greater than 0.2. If it is greater than 0.2, it comes out in green like this. By implication, it means that that currency is going to be strengthened. It's going to have strength. And alternatively, if it comes out below 0.2, anything 0.1, whatever, that means it's going to come out in red. And red means it came out bad for the currency. And by implication, the currency is going to be weakened as at that allotted time. Okay. Now, there are a few times where you can have it coming out in black. Black means that whatever either previous or forecasted figure expected, it came out as the same. So, for instance, we're expecting, we have a forecast of 0.2% and we have actual of 0.2% as at 9 a.m. It's going to come out in black. It means there was no difference. All right. So, in that instance, you're advised to just possibly stay out of the markets. Right. So, that is basically how we use the Forex Factory. Meanwhile, for today, the major economic news that are possibly really going to affect the market is for Euro. So we are going to be having the German prelim CPI. Now, Euro is a combination of different countries, different economies put together, especially in the Eurozone. So Germany is one of them, and Germany is like the biggest economy in Europe. So we are going to be having the German prelim CPI. That is the CPI preceding the major CPI. That's CPI is Consumer Price Index, which is an indicator of inflation. Please, let's have our audio, our mics mute, please. Let's have our mics mute. Big Joe, your mic is not mute. Please. Thank you very much. Thank you. I appreciate it. So, so we want to check for the level of inflation. Consumer Price Index, one of the ways we check for inflation. So we know the inflation data for the German economy as at that time. So this is no specific time, it's just all day. Meanwhile, By 3 p.m., we're going to be expecting consumer confidence for the US, as well as the JOLTS job openings, the JOLTS job openings rather. Now, this is also similar to NFP, for those who understand NFP. And our NFP is going to be by Friday. But before then, we'll have our CPI. Sorry, we'll have our FOMC rather. Have our FOMC tomorrow, 7 p.m. These are the guys in charge of setting the interest rates in the US economy, part of the Federal Reserve. Then by Friday, we are going to be having our dearly beloved NFP. Okay, so this week is full of very, very significant and high impact news. Hence, all of these can be taken advantage of to make some serious money. Okay, so that is just for what we are expecting today. So euro all day as well as the US dollar by 3 p.m. for today. At least let's know what can possibly move the market today. Now, demand and supply, we can clearly see the impact on the charts. So we are done with Forex Factory. We are on our chart right now. So please, I just need you also to respond if you can see my charts. So I'll not just be talking over what you can't see. If you can see my chart, please let me know. Just say yes, it's okay on the chat box so we can continue. Okay. Awojabi Felix. Does that mean when it's green at the period price, it will continue to move upward all through, or what? Oh, okay, okay. All right, thank you for your responses. Thank you, thank you, thank you. Awojabi, right? Awojabi Felix. Now, if it's green, green is good. It's just like the traffic light. Green is good. Green is good. Our price is expected to pull up, like to rise, depending on what you are trading on now. And if it is bad, red means bad, the strength of that currency should fall. Is expected to go down, right? Also depending on what you are trading. Okay. Now, I'm sure a lot of you would have received mails before NFP and the likes that leverage can be reduced. Now, this is one of the ways, because a lot of persons don't know how to trade news. That's the truth. A lot of persons really don't know how to trade news. Now, the best way to trade news is to follow the result of that news immediately it is coming out. But the problem we have most of the time is that just immediately the news comes out, before you say Jack Robinson, price has moved, right? Hence, it will be difficult for you to trade a lot of things. You can't trade gold, Euro, USD, US 100, US 1000 at the same time. It will be very difficult. Now, one of the things people now do is to be trading via pending orders. The problem now is, where do I set my pending order? It's also a problem, right? There are instances where price want to go down, but you just see spike up a bit, pew, hit your buy stop orders, then all of a sudden go down. In that case, you stand the risk of losing funds, right? So trading fundamentals can be tricky. Now, there are some fundamentals you don't just want to set anyhow orders. Things like CPI, NFP, right? Especially those two. They are like the top two highest fundamentals so far. Hence, the unexpected can just happen. So in that case, you really, really want to be careful, right? We're trading all of that. So I can assure you it's not the market's fault. There's something you're obviously doing. So let's start our analysis so far. Okay, this is Euro USD. I know a lot of persons trade Euro USD. I'll starting from currencies. Please, let me just state here, not just you, Sunday IM and others, please. My major aim is not just to come and start to dish out or buy, sell, or buy at, sell at so price. No, not really. Not really. That is just giving you a handout or giving you fish. My major focus is to teach you how to do proper analysis, so that on your own, you can properly analyze the market and play straight and you make profit. Yes. So anytime I come on this review, for those who are familiar with me already, um, I know we take turns on taking these reviews. Tomorrow will be someone else. I will take this review again on Thursday. So for those who are familiar with me, I don't just come and give trades, all right? I always try to teach you how to analyze. Okay, so with that analysis, yes, we can have some good trades. Okay, we are buying now, we are selling now, or you know if we are expecting price to go down all day or to go up all day. Okay, so just sit tight. We are going to be analyzing all of these stocks. Now let's start from Euro USD. Now, basically, I noticed that a lot of people fall into the trap of you look at the chart the way it is right now. Right now, this is Euro USD current market price, and a lot of persons will just okay. Let me just take a position. So let me just ask this question now. Have it at the back of your mind that there is no wrong answer. Please, there is no wrong answer. Your answer is your opinion. Your answer is your opinion. There is no wrong answer right now to my question. So it's just your personal opinion. Now, from what you can see, current market price, this is a 1 hour time frame on Euro current market price, 1 hour time frame. Do you think price will go up or price will keep going down? What do you think? It's opinion. I just need your responses. Up or down? Please, your responses on the chat box. Up or down? Okay, Elijah, up. Okay. Not sure. Fair enough, not sure. It is retracing. Okay. All right. Now, this is exactly what I'm talking about, which is good. Now, so we all have difference in opinion. Difference in opinion. Now, I can see a lot of persons saying up. Very few persons says down. I think 1 or 2 persons are not sure of where price will go. Okay. A lot of persons are now beginning to do down. Not certain. Okay. Thank you for your responses. Now, let's say I say now look like this candle is trying to go right. All of a sudden, it's back. Now, in few seconds or 7 minutes, price just start moving down. It just after the next candle comes and keeps going down. It looks like it want to go up. The next candle even goes down massively. Has it happened to you before? Has it happened to anyone here before? You take it on. The moment you in that position, price just start going against you massively. Severally, okay? Now, this happens to a lot of persons. Now, the major reason that I've seen that makes it happen to people is because when you want to analyze, I find that people do improper, if that's the word, improper analysis. Anthony, I'm not sure you can speak now. Please just if you can hold on to when you want to speak. But if it relates to what we are saying now, you can just type it in the chat box. I'll respond to it. Okay, put it on the chat box. I'll respond. Okay, you have been doing things the absolute wrong way. Now, it might shock you that sometimes, do you know that if you want price to go up, if I want price to go up, for instance, there's a way I will analyze price that will support that my preference, that buy up preference. Sometimes you come into the market with your emotions, you come into the market with your own natural bias, and the market is no respecter of anybody. The market does not, you're not the only one trading. We have hundreds of millions of persons trading the market as we are speaking. Hence, your own singular opinion does not count. It is in your best interest to align yourself with the popular opinion. Have you heard the word? If you cannot beat them, you do what? You join them or join the bandwagon. Price is pulling up because majority are buying. And price is going down because majority are doing what? They are selling. So what are they seeing that you are not seeing? Apart from the fundamentals, okay? Now, this is how I would like you to do your quick and very easy analysis. Some can be complicated, but let me give you a very easy analysis. And trust me, the simpler it is, the better it's going to be. Market is not complicated. We are the ones making it very complex, okay? Now, first thing is this. Whatever you see on your lower time frame, please do not trust it 100%. I always say this. Whatever you are seeing on your lower time frame, do not trust it 100%. That's one. What are the lower time frames? 1 hour, 30 minutes, 15 minutes, 5 minutes, and 1 minute. All of those time frames can show you exaggerated movement in the market, which might not really be the true reflection of where price will go in the nearest future. They can be exaggerated, okay? So do not trust them 100%. It doesn't mean they might not be right. They might, they're always wrong, but don't just trust it, hook, line, and sinker. Subject it to other further analysis. Now, what do I trust? Trust your higher time frames. Your higher time frames gives you that true picture of what price is going to be doing in the long term. Possibly in the next few days, the next few weeks, or even in the next few months. Now, if I know where price will be going in the next few days, for instance, for the rest of the week, is price going to be going up or down? It will help me to know if I should be doing more of buy or more of sell. Now, the last thing is now, where can I join the market now? So first things first, go to your either 4 hours or your daily time frame, H4. Then you zoom out. Look for a pattern. Am I having an uptrend, a downtrend, or is the market currently ranging up and down and up and down, right? What are you seeing currently on your charts? If it is not clear to you, then you go to the next higher time frame, which is your daily time frame. What is price doing on my daily? At least, what is price doing currently, or what has it been doing for the last few weeks or last few months? Now, on my daily, price has been ranging, taking this high and this low.
Maybe you can't hear people
The highest
because
point.
the volume on your
Price
computer got
has been
turned down or on your external speakers. Go to your volume
Please,
control.
the mic is, please, everyone just mute, just mute, just mute. Thank you. Now, on my daily, I see price doing high, low, high, low, high, low. And this is like the low. Up, down, up, down, up, down, up, down, right? Now, this up, down, price is trending, but trending inside a wider range. So for days or possibly weeks, price will work its way all the way up. Then after the price will try working its way down, work its way up, work its way down, work its way up. So price is doing like a zigzag movement, but inside a range. I don't know if you get what I'm saying. Upward movement inside a range. Ranging, thank you very much. It looks like this on my 4 hours time frame. If I put it on 4 hours, then I zoom out. This is how it looks like. So inside my 4-hour time frame, I would notice that price will take days to go all the way up, come down, all the way up, come down. Now, until it gets to the final destination, before it will start another journey down. Notice that when it got here, it didn't really get all the way up, came down, but finally got there, started it down, didn't really get there, didn't really get there, didn't really get there. You know, let me see. Didn't really get there until, oh, sorry. Okay, so it has not even gotten down here. So we needed to get down here first before price will start going back where? Back up. I don't know if somebody's getting what I'm trying to explain here. Now, the more you do this analysis, the faster you will be at it. Once you can master it, once you understand it on Euro USD, you can apply it to USD JPY, you can apply it to your gold, apply it to your US 100, apply it to whatever you are trading. Is the same formula, you apply it to any instrument, but there might just be some slight differences, right? Just be some slight differences. Okay, thank you. You're understanding what I'm saying. Good. Now, there are some instruments that once you do this on, you notice that, oh, what they are doing is just trending. They are like massively trending, retrace a bit, continue trending, replace a bit, and that's all. So you follow what you see. Don't come with your own personal opinion. The market has a particular way it's moving. Follow it. I think what I was explaining something yesterday. I said, price is either moving towards a particular level or moving away from that level. It's in your own best interest to know what price is doing per time. It's like a river. It goes upstream, downstream, upstream, downstream, upstream. And what do you think price is currently doing now? Is it upstream or downstream? Like currently, for the last few days? Up or down? Where do you think price will go from this chart now? What do you think price will do from this particular chart? Your opinion, just your opinion. Obviously, down, down. And where do you think most likely to get to? This is the highest, this is the like extreme level that I'm expecting to get to. Worst case scenario is that price does this, comes down all the way to this level again. At least it comes down to this level. That is, if at all it's not getting all the way here. So you want to maintain this level of support, you know, extremely okay, respected the support. Worst case is that price comes back to this, my support level, all the way here. Once it does, fine. And extreme, it can get all the way here before we can even envisage a possible rise again. So I don't know if you get my point. Now, what I'm trying to say in essence is, Shaibu, are you having a light bulb moment like, whoa, you know, just like the veil has been removed from your eyes? You know, sometimes it happens like that. So go down and start up when it gets to the support. Exactly. All right. So that is exactly what I'm trying to point out right here. So it's your own best interest to know. So I know that it will take days for price to go from here to here. It won't just happen in one day. Hence, it means that I'll be buying. And price started this thing from days back. Now, this is my 4 hours. So I won't be placing my trade on my 4 hours time frame, right? I will want to come to my 1 hour time frame in order to enter my position. So I come down to my 1 hour time frame. This is how it looks like on 1 hour. It means that price has a chance of closing more bearish, down, ranging down a bit, down, you know, up, down, close slightly bullish, range massively down yesterday. Okay, so I want to sell on 1 hour. Where do I sell from? Where do I enter myself from? So where price is right now, do I sell or do I wait? There are 2 things you can do in order to know exactly when to take your trade. The first is you use your liquidity, or you use what we call the previous day's high. Before it starts going down, it will make some corrections at the resistance. Esther, you are very right. You are very right. But it depends on the kind of movement you are seeing. Depends on the kind of movement you are seeing. So let me explain that. Now, for price to go down, it first of all needs to go up, right? I think that's what she's trying to say. Do some corrections before it continues. It's just like saying, oh, my final destination is still all the way here. I'm moving from Lagos to Abuja. I've gone from Lagos to Ibadan. I need to just eat. I need to use the restroom. So price is stopping right now. I'm trying to gather strength again in order to continue my journey. My journey here, downward, okay? So it now depends. I can find strength from 1 of 2 places. Either I get strength from the previous day's high. This was the highest point price got to yesterday, this level. So I can decide to mark that level. That's it. Now, which coincides with previous day's high. Notice that this was the high of the previous day. Now, the next day, first of all, got to that high, came down, went back there and came down. The next day went to that previous day's high. Immediately it gets there, what happens? It comes down. Yesterday, price opened, went back to the previous day's high, and what happened? It fell. So today now, price can still as well go back to previous day's high. That means price can do this, go back all the way up here, the moment it gets here, you can experience a massive fall. It might be very massive, but at least it will fall. It might close bearish or it might still close bullish, but price will fall again. Or price might not do that. Price will take what we call liquidity, which is, you see this level here, these clusters, all of these clusters, this point here where price is ranging. Let me put it this way, let me mark it. You see this ranging, short candles, all right, ranging for hours. I mark this space and I extend it into the future. Now, the way price, the character of the candle there will be short candles, doing up, down, up, down, up, down, up, down. That's how you know it, identify it. Short or small candles, doing up, down, ranging, very small range, ranging, and ranging, right? Now, price is doing that. Any candle that tries going massive, that wants to be a long candle, for instance, this guy, instead of it being like this one tried going all the way down. Look at how massively it was rejected. So much so that the body of the candle looks almost the same size as this previous one. That's what I'm trying to say. Any candle that wants to become long will be rejected so that the body will look almost the same size with the previous ones. Up, down, up, down, up, down. So now price is resting at that point, looking for momentum to continue pushing to the downside. So that's what explains why price opened today and is ranging here. Anytime it gets here, you see some level of rejection. Even this one that is here right now, you are seeing some level of what? Rejection. So price can decide that, okay, I can decide to start going down from here. Price can decide going down from here. Let me reduce this guy. Keep going down from here. Or it goes as high as yesterday's high. Now, for the fact that yesterday's high is quite significant, we have a good number of pips before price can get there. It's most likely not going to happen. Most likely not going to happen. Most likely not happen. Most likely not going to happen. The distance is, significant. Yes, the distance is quite significant. So there's less likelihood of this happening, but there's more likelihood of from here at any moment from now, we sell. So I personally, how do I attack this market? Since I have two good points for price to keep going down from, I have one and I have two. What I will do is I can enter a sell right now from here. Once I enter a sell, I will decide, okay, fine. In case price doesn't sell and it goes as high as this level, now the chances of price selling from here will become way more higher. In that case, I'll have a negative trade going up. But once price gets here, my negative should start reducing and coming down. But what I'll do is if it gets here, I will have another sell with possibly even a higher lot size. So as it's coming down, the previous negative is reducing. Now this one is accumulating profit on a higher level. I don't even need price to get all the way down here before I can close my trades and I'll still be in profit. Right? So there are times where we just apply some level of wisdom to it. But if it was like previous day, if it was that price is here and the previous day's high is not far, is somewhere like here, for instance, then we can as well just wait for price to tap into that zone before we start selling. It will be easy for price to do, actually, very easy for price to tap, just like we've been having the previous days, right here, just like we've been having the previous days. Very easy. Once price open, it will find its way back to the previous high and start falling again. Find its way back there, start falling, find its way back there, start falling. Now that this is very significant, yes, it can still do it, but it can decide to just pick liquidity and continue on its way. I don't know if you understood all I have said since. Yes, you can surely use Fib. You can use your Fib. You can use Fibonacci also to try getting that particular level. You can use your Fib. Put it here also. You can use your Fibonacci to do it. Sorry. Let me take this out. Let's see. All the way. So at your 50% retracement level, or this is like 100%, okay? At your 50% retracement level from what I just drew here, right, we can decide to start taking our trades. 50% also coincide with the previous support. Now, I understand the fact that, let me take out this feed first. There are times where, from experience, you tend to see what price have done over time. You tend to see what price has done over time, right? Hence, you will know to an extent what to expect. What to expect. Now, if you notice me, I am not just telling you that 100% price will start falling from here, right? No, I'm not doing that. 100%. And that's one of the mistakes we always try to do. We always try to think that our analysis is going to be 100%. No, you are only trying to analyze and see what price can possibly do. Sometimes you might not have just one conclusion. You might have two things that price will most likely do, right? So your job now is to become what we call a reactor. You react to what the market does. You don't just 100% predict. If you always try to predict the market, you will get burnt. You will get burnt. Sometimes you might be right, but I can tell you that a lot of times you do. But if you only try to react to what the market does, then you will be right a lot of times. Hence, I'm now telling you that I can take a sell here. Alternatively, if market does this, that means I have an alternative scenario. I already planned my trade, how I will react if price moves in a certain way. It will help you to keep calm. Even if I enter a sell now and price starts going up, I'm in negative. I wouldn't be fretting. I wouldn't bother. I will not be scared because I know that price can get as high as this place. And once it does, the likelihood of going down is very high. It will be hard for me to be wrong on this, very hard. The likelihood of me being wrong on these two levels of analysis is very low. The likelihood of being wrong is low, right? So that is what we call plan your trade and trade your plan, okay? All right. So that's for Euro USD. It's selling say price will still continue crashing. Just like Esther said, might have some corrections first before price continues crashing. Okay. So that is for Euro USD. Someone mentioned that Euro USD and GBP USD are doing the same thing. Actually, I did not say you can buy. That is not what I'm saying. I am saying price is going down. Instead, we are looking out for sell, not buy. I said if you sell and price decide to go up, this is where you start selling from. We are not interested in buys. We are not interested in buys. I will only sell on the condition that price goes as high as this. I am not buying it because price is not 100% price will go as high as this. Price can decide to start going down right now, right? I am only going to sell if price gets here. So there's nothing like buy. We are envisaging a, right? So let's quickly go to other important instruments again. Gold. I see a lot of persons mentioning gold too. Is there fire on the mountain? Gold is a wonderful instrument, but at the same time, quite volatile. You know, they say sugar can be sweet, but at the same time, that sweetness can also cause harm. A lot of persons can make money on gold very fast, but at the same time, if it burns you, it can burn you well. Gold is bullish right now. Well, right now, it is bullish. My own question is this. Is it going to keep being bullish? Now, that is a proper analysis. You are only focused on what is happening right now. You can get bumps. You can be very wrong. I will accept what you said that, right? Gold is being bullish right now. Yes, we can see that since market opened today, we are seeing a good bullish movement. My question now is that bullish movement going to continue? So I will know if I will keep buying, or is it going to go down and become bearish? So I'll know if I'm going to be selling. Now, how do I analyze this stuff? I think the last time I taught us a particular way of analyzing a particular instrument. So what is that kind of instrument that can give you some kind of trend Yeah, gold market. When price is trending, so let me put it this way now. If I reduce my charts, you'll notice that gold trended up for days. In fact, for like weeks, it just kept going up and up and up and up. Now, all of a sudden, we are now seeing what? Down and down and down, right? So, does it mean that the trend has changed? Is this down and down most likely to continue? When we put it to a test, remember I said don't trust your lower time frames. Go to a higher time frame, 4 hours. This is what 4 hours is telling me. 4 hours is telling me that, oh, gold was going up previously. It started ranging. After ranging for a while, it went up, now it's coming down. That means there is a major support level or a proven support level all the way down here for gold. And at the same time, gold had a previous resistance level, this all the way this high, that was taken out. It took it out, right? Let me adjust it well. Now, this previous resistance level was taken out. Okay. Now, what does it mean? So this is the highest point we've had on gold so far. This level here, this is the resistance level. I always like extending it to the future, right? So I can use it future to trade. Now, it means that after trending up for a while, gold range. Remember, a trend inside of a wider range. It will do downward movement, upward movement, downward movement, upward movement. Now, it went as far as extreme, which can be caused by fundamentals. Now, price is back inside our previous range. Wrong or right? Yes. That means that price is still most likely to keep going down up to where? Here. Now, are you seeing the bigger picture? It's like a flow of the river. Price does not necessarily move randomly. Price does not really move randomly. If you spend a lot of time or enough time on your chart, over time, price will prove to you that as much as fundamentals come to affect movement of price and the likes of things, the overall movement of price is actually predicated that price is moving towards a level, and until it gets to that level, it won't change. There might be some interruptions in between. So let me tell you a possible interruption. Now, do you know that in between these movements now, Esther said price can be bullish. I'm sorry, but I just want to use that as a reference, right? Based on daily analysis. Okay, exactly. Gold can be bullish for days, right? Based on daily analysis. Now, let me tell you something. Now, this bullish movement, price can come back being bullish back to this point. Just imagine like I'm moving from Abuja to Lagos. I always like using this analogy, something very simple like this. After getting to Ibadan, I realized, oh, I forgot something very important. I'm supposed to move from Lagos here all the way to Abuja here, right? But after getting to Ibadan, I realized I forgot something. Then I go back to Lagos. It doesn't mean I'm still not going back to Abuja. I'll just go back to Lagos. It means that it will now take me more time for me to move from Lagos again all the way to Abuja. In the long term, the overall movement of gold is bullish. Like the monthly time frame, the weekly time frame, in years to come, I can tell you for free that gold will keep being bullish till thy kingdom come. But right now, what are we experiencing? Gold is trapped inside of a range. And price went outside of the range once due to fundamentals and is back inside that range again. So there is a higher tendency that gold can go back into the lower part of that range before continuing back again. Now, in the long run, at some point, this resistance will be broken and price will not come back inside again. It will keep being bullish. right? It will keep being bullish. But right now, is that most likely the case? Not really. Okay. Now, let me understand Esther's daily time frame. Let me see. Let me take this out. Delete and delete. Okay. All right. So we had this hanging man. We had a massive bearish daily time frame candle. We have a bullish one. Then we have now this one. It means that it started bearish, bullish, but ended up being bearish. Now price moved bearish. I'm sorry. Yes, price moved bearish. For price to move bearish, so I don't want to complicate this session. I think maybe on Thursday, I'll teach you how to trade using your daily time frame. The simple analogy is just the analysis of if price want to go up, it will first go down. And if price want to go down, being bearish, it will first of all go up, right? So we usually use the high low open, the open close high low, right? Or the last 2-3 days candles highs and lows in order to know how to do that. So let me not complicate it. I just want to teach us a very simple strategy now. This is not a perfect logic. It's candle. Yes, but not a perfect logic. It's still showing us some better sign of bearish than bullish. The only reason why this bullishness can stand is the fact that price has already done the bearish move. And you can see that it is no longer red. It is no longer bearish. It is now being bullish, okay? So it can continue. But price has a limit, which is the previous day's high. This was the highest point for yesterday. And this was the high, I'm sorry, yesterday. And this was the highest point for last week, Friday. So if I come back to my 1 hour time frame, it means that as much as price can be bullish, it will most likely not be bullish more than this zone. Inside this price can decide to start going down. Now remember, this was higher. This is yesterday's high. Okay, so we can as well still use yesterday's high to see if price can continue being bearish. There are two things to note. If okay, there's one major thing rather to note if you want to know if price has changed direction. So far, I'm seeing some bearish move. Okay, bearish move consists of lower highs and lower lows. Lower highs and lower lows. That means this is a lower high, and this here is a lower low. So lower low, a lower high. Another lower low. Let me take this out. Another lower low here. Okay. Then also give us from here, price formed a lower high for us here. Now, for me to be confident that price is now bullish again, price need to break through the last two lower highs and lower lows. Price is currently trying to break this one. Let me see. This low here. Price broke it, came back again, broke it. I need price to break this one and price to break this one. Once price can break this one back, it is no longer. But as long as price remains between this down and this high level here, price is still bearish. Okay, so gold is still bearish, but I need to come high at this level before I can sell gold. So guys, don't just hurry and sell gold right now. In the long run, gold is still coming down, but gold can still pull up. Okay, to this level here. Gold can still pull up to this level all the way here. Right? Once gold gets to this level, then we can talk of selling gold. Right? So this is where I expect gold to go. In the long run, it's going to be bearish. $24.20, 24.20. Okay, this level, right? Now, oil, please. When we see, okay. How do you place a trade in high impact moves? Like I said earlier, you can do one of two things. I think time is fast spent. Just please go back to this video on YouTube. I think we'll post the link to this video. Go back to this video on YouTube so you can listen and watch the video all over again. You can use either your buy limit or your sell limit. Sorry, your buy stop or your sell stop, your stop orders or your limit orders. And you can also do your instant execution. Okay. You can also use your instant execution. So if price is going down at the current rate, let me take one more, because I think we just did like 2 instruments for today. Let me see. Okay, US 100.
I say go on back.
Please, let's make sure you are mute. Let's all be mute, okay? Now, this is US 100, and we previously had some bullish moves. Now we are currently having a bearish move. That means price has changed direction, but the overall trend is an uptrend. The overall trend, this is a weekly time frame. The overall trend is an uptrend, but that uptrend is in the long run, okay? Okay, so that uptrend is a long run. So we usually experience some level of retracement, which we had here. We had something like this here, retracement. You know, we had some serious retracement here. And currently we are experiencing some very sharp retracement on US 100. So where is that retracement most likely to stop before price will go down? So usually we can take the previous high, this previous high, okay, this level here. You can take the previous high. Let me see on our daily time frame. Okay, so using this previous high, no, I need to adjust this. The time frame. The way indices work is almost very similar, but one difference is that the level of retracement in indices can sometimes be slightly different from that of currencies. Right? It can sometimes be slightly different from that of currencies. Okay, so I want to pay very attention to all of these instruments. So if I subject it also to my 4-hour time frame, so you see that US 100 can still come all the way down here before price starts pulling up. So yes, US 100 can start reversing now. US 100, we can see some level of reversal, but I would trust that reversal if US 100 can come as low as this level first. Low as this level, which happened to be the, this previous resistance level. Once it can get back to this place, then we can think of buying US 100. But am I buying at current market price? Not really. I only buy if price comes all the way down to this level here, all the way down to 18.7. Basically this level. This is where I'm interested in buying from. Okay, so don't be shocked when you see US 100 pulling down. Now, if US 100 goes up for today, there is only one single explanation. It's trying to do correction. And that correction is trying to aim back at yesterday's high. Don't forget, these are key things. I'm not using bogus languages. I'm using very simple terms to explain these things to you. All right. This is where yesterday's high is. Now you will notice that it's quite a distance from where price closed at and where price is right now. Okay. So the only thing that is going to be pushing US 100 up is trying to do some level of correction before continuing down and getting to its final destination. So the same thing we are doing to our Euro USD is what we'll be doing to our US 100. Okay, we are still envisaging slightly for lower movement. Now, somebody will say, why don't I buy it then, since I'm expecting it? It is not 100% necessary for price to go up. It's not. price can just all of a sudden turn and go all the way down. That's why I said we are not buying it now. So we will not be in that buy, and price will shock you and first of all go down first, right? So I need price to come here first before I start my buy. But before price comes here, there is still a slight chance that price will do some correction before finally come all the way here. So if you see US 100 going all the way up, don't think the trend has changed again. No, it is a correction. Until it gets here, it cannot pick up maximum momentum and liquidity for price to start reversing. Okay, so I think this is as much as we can take for today. This is as much as we can take. Please, I would not appreciate trying to advertise your other business on this platform. Okay, please, Esther, please, this is directly to you. Please take notes. Yes, I respect the fact that you have your preference. You are a good analyst, which is good, but please, I would not encourage you trying to advertise it. So please, this FX book, please, let's just keep to certain rules. All right. Thank you very much. How do you have the vertical lines in your chart? You just simply click here, tells you draw vertical line. Just click it, then you drop it anywhere you want to. Okay, all right, that's it. Okay, so this is as much as we can take for today. Now, remember my statement at first that I'm not just going to teach you fish, give you handouts rather. I'll teach you how to get the handouts yourself. So, some of you can some things or some things are not yet clear. Kindly head back to our YouTube channel at Rally Trade. You will see this video. Please watch this video again and again. In fact, study the video. Understand the simple analysis I just taught you so you can apply it to almost any other charts. All right. Thank you very much for your time today. Looking forward to seeing you tomorrow and have a peaceful day. Thank you. You can erase it by double clicking on it. 1, 2, right click, then delete. You double click first. It pops out this right click, then you delete. Yeah. Cool. Thank you very much. You're most welcome, everyone. My name is Victor. Thank you very much.
Yes, now. Thank you, I didn't say that. But now, I want to make that. Something I have to talk about. You want to tell me my own people. What is it? Go there now. Okay, I can tell you about people go to somebody who was